Gary Wagner here just before 11 o'clock in Honolulu, 4 o'clock in New York on Monday, 27th day of January 2014, and this is the daily report for gold and silver. Although coming off of the lows, as you can see on this 60-minute chart, we have precious metals, specifically gold here, under some pretty dramatic pressure. Currently trading off about $13, $14, low 51.30, high 73.60. Interesting day. We'll talk about that throughout the show. Similar scenario in silver right now. It's off about 28 cents, 1960 current print on the screen. The low is 50, the high is 2011. Traders, as you can see, we're currently trading off the lows at about 12.55. You can see the lows that it came in here, and it seems as though we have some support roughly at about 12.52. We're looking at a 120-minute chart. And traders, when we look at our half-a-day chart, again, standard candlestick format, you can see this dramatic drop that we got. In fact, overseas, it was trading higher throughout the evening, traded roughly a couple of dollars higher to unchanged on the evening, but talk about tapering really going on course even without Bernanke. As we go into the FOMC meeting that is scheduled this week, we do have some pressure coming into the markets. Now, it is coming off of the lows. We are pegging 12.52 as support, but the real question is, has this caused any kind of long-term damage? And to do that, we really need to pull up our daily chart. Now, we're looking at our daily chart, and the first thing that we have to state, of course, is the fact that we certainly not only didn't get follow-through, but we got a pretty severe sell-off. Now, when we pull up this chart, what is important to me right now, we have our stops in place anyways at 12.45, but the fact is that whether or not this particular long-standing resistance line holds. We had the market absolutely trade above it, and that's what triggered our buy signal. We got absolutely no follow-through, and you can see that we got these highs right there, and that high itself could not be sustained by any stretch of the imagination, and we now have some downside pressure in the market. However, we are still in an area, and we'll go ahead and compress this a little bit again, but we're still in an area without a doubt where we're trading above this line. If we trade below this line, traders, in my opinion, all bets are off, because we're not seeing the kind of follow-through that we really needed to see to really look at this market through any kind of bullish eyes. Now, traders, I have to acknowledge the fact that this kind of bearish action is not what we wanted to see. We really needed to see follow-through, and we're not seeing the follow-through. We're looking at weekly charts. On the left-hand side, I have it in Japanese average format. You can see that we are getting a smaller body size. However, as of now, we have these upper tails here, but we don't have a lower tail. But the upper tails are really what we want to not see, because what that says is that it traded above the midpoint at all times of the prior candle or last week. The fact that you have a tail tells you that it hasn't been at all times trading above that midpoint. But it's still green. Realize, though, that the Japanese average charts are always going to filter out noise, and especially when you move them to a weekly chart, they're not that sensitive. You really get a true sense of what we're seeing right here when we look at our weekly chart. Realize it's only Monday, but already it's almost engulfing the entire candle of the prior week. This right here could be construed as a hangman because it has that long tail, small body size. However, we want to really see what kind of follow-through we're going to get. And to do that, we want to look at our daily charts from just a straight candlestick format. And this is the chart that I was referring to. This, of course, is a daily chart. And we have our true opens and closes because we are looking at it in straight candlestick format. You can see this high that it hit roughly at around 1280. 1279, 1278, roughly in that area, but you can also see that the market has traded not quite to the midpoint, and that's important to me also. The key right now, the key is whether we'll see this market recoup and begin to trade higher, or will it actually go ahead and break through that long-standing resistance line. Because if it does, traders, to me, it's an extremely bearish signal. The fact that we had that big surge last week, we had a $40 day on Thursday, then we had a couple of dollars higher told me that it had in fact broken not only above, but was attempting to build a base. That base has absolutely eroded today. There's no question about it. And when we look at this long-standing resistance line on a weekly chart, we're extremely, extremely close, if not almost there, when we consider that our current print, which is 1254, takes us right to the bottom of this line. And so there's no doubt we're under some pressure on this trade, one, and two, gold is under some pressure. And the question is, will it be able to sustain, even with this sell-off today, will it be able to sustain a price point above this particular long-standing resistance line? Because traders, to me, that's of critical importance. Now, traders, of course, we did not take any positions in silver, but I also believe that silver is at a really critical point. You know from past shows that we've talked about a real key level, and that's roughly at about 1958. Market's currently trading 1960, 1959, so it's right at that level, and that to me is a major point of support. If it breaks through there, of course, the next major support level doesn't come in till just below 19 at 1890, and that is based upon this series of support that we have, these candles here and these candles here. That's where we're looking at this particular support level. But as I said, we are currently at a real critical level, just trading one tick above 58. And as I said, 58 to me is a pretty critical level in terms of support in silver. We'll have to see how this market holds. If it's able to hold, we've got gold trading roughly at 55, so it has been coming off the lows, but still under pressure today. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow on Tuesday for another daily update and review. Bye-bye.